everyone. Man, I'm actually really surprised that I got as much interest for this group as I did on that post. Welcome aboard to those of you that have joined up, and I want to make a video to just put some basic information about stocks and about how I do things to just kind of help you get started for those of you who have not traded stocks before or who don't know very much about it, okay? Before I do that, I want you to know I have not been doing this very long, okay? I have accumulated quite a bit of knowledge in the 6 months that I've been doing it, 7-8 months that I've been researching it. But I am not a financial advisor. I am not qualified for you to look to me as some kind of a guru who knows everything and can answer all the questions. That's not what this group is going to be for, okay? I am going to put, like I said, some basic information, and I'll probably make more videos talking about stocks and, you know, stuff like that. But it's not so that you can, like, look to me as your source, your number one source of information. You need to be doing your own research and learning more about this stuff on your own, okay? I'm not your mama either. Like, if you don't pay attention to the things I'm telling you and you haven't done your research and you go out and you lose a bunch of money, don't come crying to me about it. I'm doing well because I'm paying attention. I'm, you know, doing my research and all that stuff, and that's why I'm doing well. If you don't do that, then you may not do well, you know, and there's always the possibility to lose money in the stock market. There's also the possibility to get rich as a motherfucker. So, you know, it's all dependent on you. I mean, you know, people like to say it's gambling, but, you know, and to a certain extent, it could be considered gambling. But if you're doing the research, there are lots of safe things to invest in. Okay, so with that said, this is going to prove to be a pretty long video because I've got several things that I want to talk about in this first video. Very important that you watch this whole video, okay? Okay, the first thing I want to talk about is probably the most important thing that you need to be aware of, okay? And that is taxes. I am going to tell you how to trade tax-free, okay? I'm going to tell you a way that you can trade and there will be zero taxes associated with it, all right? But before I do that, I want to talk about how the taxes work if you don't do things the way I'm doing it. If you don't do things the way I'm about to tell you, okay, then there will be taxes and the tax man will come knocking, and don't come crying to me if you have not prepared yourself for that, okay? So the way taxes work in just a regular stock account, okay, like I said, I'm going to tell you how to get around this, but if you choose to just go make a regular stock account so that you can use the money to buy a car next year or something like that, or so that you can have the money available for you right now, then this is how that works, okay? You have two types of main types of taxes. You have short-term capital gains tax and you have long-term capital gains tax, okay? Short-term capital gains tax means that you bought and sold a stock within a year. So if you buy a stock and you hold it for less than a year before you sell it, you are subject to short-term capital gains tax. If you buy a stock and you hold it for more than a year before you sell it, then you are subject to long-term capital gains stocks or capital gains tax. So short-term capital gains tax means that whatever profit you make, so if you put $1,000 into a stock and you turn it into $2,000, then you will owe taxes on $1,000, the profit that you made, okay? The short-term capital gains tax on that will be the same as if you drove for Uber and made $1,000, or if your employer paid you $1,000. It will be taxed just like any other income, okay? Long-term capital gains tax is taxed at a lesser rate. So most people, I mean, I believe it has to do with tax bracket, but most people are going to be paying 15% for long-term capital gains tax, and I think the most they can get you for is 20%. Okay? So, there is a lot more to how the taxes work, okay? Just briefly, there's like the gains and the losses balance each other out, so that if you have a net gain, then you pay taxes on the net gain. Meaning that if you have $10,000 in two different stocks, one of them loses $5,000, the other one gains $5,000, then you have no taxes. The other one gains $6,000, you owe taxes on $1,000. If you lose more than you gain, in other words, you end up with a net loss, then you can use that as a tax deduction. So up to $3,000. So if you lost $3,000 in the stock market this year overall, then you can deduct that from your, you can use that as a tax deduction against all your other taxes for your job or whatever. If you lost more than $3,000, so if you lost $6,000, you can only deduct $3,000 of that loss for that year's taxes. But the other $3,000 will carry over to the next year, and you can deduct it the next year. And actually, I think that works for like 8 years or something like that. So if you were to lose, $60,000 or $50,000 or whatever, you could do $3,000 a year for the next 7 or 8 years or something. Anyway, that's a little more than in depth that I want to go. Okay, but I just want to make the point that you need to be aware that if you do not do things the way I do them, you will owe taxes. Okay? Now, here's how you do it in such a way that you will not owe taxes. Okay? There is a retirement account called a Roth IRA. Now, there are different types of IRA accounts. We're not talking about just a regular IRA. We're talking about a Roth IRA, R-O-T-H. All right? A Roth IRA is a tax-free retirement account. Okay? So you've got your 401k through your job, you've got regular IRAs, stuff like that. Those are what's called tax deferred, meaning that you don't pay taxes on it right now, but when you retire, you have to pay taxes on the money that you withdraw. Okay? A Roth IRA, you put your money in there after you've already paid taxes on it. So if I put $1,000, I get paid $1,000. It goes to my bank account. I've already paid taxes on that. Okay? I put that $1,000 in my Roth IRA. Whatever I do inside that Roth IRA, buying and selling, within a year, after a year, whatever the case may be, whatever I do inside that Roth IRA is tax-free. Meaning if I take $10,000 and I turn that $10,000 into $1 million, when I retire, I will get $1 million. There will be no taxes. Okay? Ever. Now, that's the benefit to the Roth IRA, is that there's no taxes. Okay? Here's the drawback. You can't touch those gains until you retire. So if I take that $10,000 and I turn it into $100,000, I can't touch the $90,000 until I retire. Okay? It's a retirement account. The point is to build wealth for the future. Now, I can drain the account. I can pull all of it out. Okay? But if I do, I have to pay taxes and penalties on that, just the same as if you were to drain your 401k. It's no longer tax-free, okay? So, another benefit is that it's basically like a savings account, guys. So, with the interest rates the way they are right now, if you put money into a savings account, you're not getting anything for it. If you put $10,000 in a Roth IRA and you trade stocks with it, make $100,000, just say you turn it into $20,000 in 6 months, and then 6 months later you want to pull the money out, you can take your $10,000 out. You just can't take the $10,000 out that you gained. But you can take your $10,000 back out. You just sell the stocks, take your $10,000 out, tax-free, penalty-free, like a savings account, okay? That's another benefit to the Roth IRA. Now, I also have a regular cash account that is subject to taxes, okay? But here's the thing. If you don't sell a stock, you don't owe any taxes. If I put $10,000 into a stock and it goes up and it's now worth $100,000, I don't owe any taxes on that until I sell it. It's what's called unrealized capital gains. It's not a realized gain or a real gain until I sell it and have access to that money. And then at that point, I will owe taxes on it. So my Webull account, my regular trading account, I only buy things in there that I plan to hold for years, okay? I buy things in there, and then at some point, I'll be able to cash that out and go ahead and pay the taxes on it or whatever when I'm ready. But for now, the only thing I use that for is just to buy things and let them sit so that I don't have to pay taxes on it. And all of my day-to-day, week-to-week, in and out trades, moves, swing trading, whatever, is done in my Roth IRA. Now, by doing it this way, I don't owe any taxes on any of it, okay? And I'm encouraging you to do the same thing. The only way that it does not work for you is if your plan is to try to make a bunch of money in the stock market so you can buy a car next year, or try to make a bunch of money in the stock market so that you can take a vacation next year or whatever. You know, if you're planning to try to build wealth long term, then this is the strategy that I think you should be following. Again, I'm not a financial advisor. Make your own decisions, do your own research. Just want you to know that if you don't do it the way I'm doing it, the tax man's going to come knocking, and don't come crying to me because you didn't figure it out and do the research, right? Okay, so get a drink here. All right, so now that was the main thing, or that's the main thing, okay, the biggest thing that I want everybody to be aware of. Now, there are some other things that are important for you to know before you get started, all right? Before you get started, okay? Let's see. One thing is the different kinds of orders, okay? The different kinds of orders when you buy or sell a stock, okay? I see a lot of questions in groups of people not understanding why things happen, okay? Because they didn't pay attention to do the research. Okay, so there's two main types of orders. A market order and a limit order. And no matter what broker you go to, they're all going to have these orders that I'm going to talk about, okay? So if you do a market order, then what that is doing is telling the app or your broker or whoever that you want to buy these shares right now at whatever price they are, you want to buy them right now, okay? So if you're watching a chart, you're seeing what the price is, you put in a market order, it's going to try to buy those shares. It's going to buy those shares at whatever it costs right now, okay? Right away. Now, a limit order, you're telling it, I want to buy 100 shares at $20 a share, okay? And it may all fill at one time, or it may take 2 or 3 different little spurts for it to fill, because it's going to buy all those shares at that exact price. Now, here's why that's so important. Some of these stocks are very volatile, and anything could happen. And if you put in a market order, okay, and then right as that's executing, the stock shoots way up, you just bought that stock at a much higher price than you thought you were buying it. Or if it shoots way down and you sold, you just sold it at a way lower price than you thought, okay? Market orders can be dangerous. They just can be dangerous. You should be using limit orders, okay? And the same thing applies to selling stocks. You can use a market order or a limit order, selling or buying, okay? I almost always use limit orders. That way I know exactly how much I'm paying, how much I'm getting paid, okay? Now, that's very important for you to pay attention to, okay? How you're placing these orders. Okay, now here are some other types of orders, okay? You have what's called a stop loss, stop loss is, I believe you can do market or limit with a stop loss, but it's usually like a market order, okay? And what a stop loss is when you set a stop loss, you're saying, I don't want to lose any more than this. So if you buy a stock for $20, you can set a stop loss that says, if this thing drops to 18, I want to sell it, okay? And so that way, you're kind of protecting yourself. I don't use them a lot, but you're protecting yourself is what you're doing. So if you walk away from the stock and it goes down 30%, it will just go ahead and sell as soon as it hits your stop loss, instead of you coming back and it's fucking lost $20 or some shit. You know what I mean? So a stop loss is a way to protect your money. Okay, and then you have what's called a trailing stop loss. Okay, trailing stop losses are really cool, guys. Okay, so a trailing stop loss, you will set a trailing stop loss, and it will you'll either be able to input a dollar amount or a percentage. Okay, you can say trailing stop loss at $1 or trailing stop loss at 8%. Okay, and what that does is, as a stock goes up, the trailing stop loss trails it as it goes up. So if you bought a stock and it's gone up to $30 and you put a trailing stop loss on it for $1, okay, then what that means is, if that stock drops to $29, it'll sell it. Now, if that stock keeps going up, then that's the trailing stop loss will follow it up, so that if it goes to 35, then if it drops to 34, it'll sell it. If it goes to 40, if it drops to 39, it'll sell it. So that's a way to maximize gains, and you can just set it and forget it and walk away. Now, it usually cancels at the end of the day, and it doesn't work during after hours and stuff. So it's only something that you use like during a single trading day. But a trailing stop loss is a badass feature, something that you need to know about, and a lot of people who don't know about it don't use. So you need to be aware of it. Any broker that you go to and make your account is going to have these types of orders. Okay, so hopefully that's good information for you. Let's see what else. Let's talk about the different types of trading. Okay, you got different types of traders out there. All right. Now, when you're like doing research and you're watching YouTube videos and stuff like that I'm going to show you and stuff like that, you got to take into account that these guys do different things. Okay, you've got day traders. Okay, day traders make quick moves in and out of stocks in a single day. Okay, there are a lot of rules associated with day trading, and most of the people in here will not be allowed to day trade. Okay, I'll go into that a little more after I explain the types of trading. Okay, day traders typically are the ones who are going to say, we'll have all these complex terms for different ways the candles on the chart look, and they'll call like, oh, it's a doji and it's a ascending triangle, and they try to use all these technicals to predict what stocks are going to do. Stay away from that shit. Okay, then you have swing trading, which is mostly what I do. Okay, swing trading means that you buy a stock and then you wait for, a couple of days, a week, a month, whatever it is, for the stock to move, and then you sell it. And what I'll do is I'll watch a stock for a long period of time, a couple weeks, month. I'll watch a stock and I'll see how it behaves. And then I'll wait for a dip. And when it hits a dip, I'll buy it. And then I'll hold it for however long it takes until it gets a pop and comes back up, and then I'll sell it. Get those gains. That's swing trading. Basically, you're waiting for the stock to swing. They all swing, and you're waiting for it to swing down and buy it and then sell it when it swings back up. And then you have investors or long-term investors. These are people who do deep dives on the fundamentals of a company, and they learn everything there is to learn about the company, and their plan is to buy and to hold it long term, and while the company grows and scales up and makes them money. Okay, and then you also have dividend investors. Some companies pay a dividend, so they will pay like a 4% dividend, okay, a 2% dividend. What that means is however much money you have in the stock, every 90 days, they're going to pay you, and then after those 4 quarters have passed, they will have paid you whatever their dividend payout is, 4% of the money that you have invested in their stocks. Some people will buy tons and tons and tons of dividend stocks in an attempt to retire with and live off of those dividends. You have to put a whole lot of money into these stocks in order to make enough in dividends to live on. So I don't do that. Okay. Those are basically, 4 types of trading. Okay. Let's go back to day trading. Okay. A lot of people have in their mind that they're going to do day trading and they're going to make money off of day trading. Okay. The vast majority of people who try to be day traders lose. Okay. They lose because they're trying to use all these technicals and trying to say, oh, well, here it is, double, it's a ascending triangle, here we go. But that shit does not always work, and most of these guys end up losing in the end, okay? And so here's the deal. In order to day trade, in order to truly day trade, you have to have $25,000 in your account, okay? And then you can day trade. If you do not have $25,000 in your account, then you can execute 3 day trades in any 5-day period, or else they will flag your account as a pattern day trader and they'll restrict you and stuff. So if it's not that you cannot make a day trade, but you can't just day trade and keep on doing that. As soon as you hit number 4, they're going to hit you with a restriction and classify you as a pattern day trader, and your account will be restricted. Okay, so if you are, I do sometimes make a day trade. Sometimes I'll buy a stock and then, man, it'll just shoot up 15%. And I'm like, well, shit, I might as well just go ahead and sell it. And you can do that. But you have to keep track of what day you did that, because you cannot do it more than 3 times in a 5-day period. So if you make one, you need to make sure, I don't do it any more than twice. So if you make one, you make sure that you remember what day that was, so that you can wait till that 6th day. You have to keep track of it, okay? Because they will hit you with violations. Okay, so be aware of that. Okay, what else? That's the kinds of trades we got, okay? And what information you're looking at, sometimes these guys will be talking about a stock, but they're looking at it from the perspective of holding it for years and years, while other guys are looking at a stock and they're thinking about what they can do in the next 3 hours. And other guys are looking at a stock and they're thinking about whether or not it will go up and they can swing trade it over the next month. So you have to think about that when you're looking at YouTube videos and stuff like that. You need to kind of think about what this guy's planning, what this person is planning, and what perspective they're coming from. Okay. All right. So let's see. What was the other thing? I should have wrote this stuff down, guys. I hope this has proven informative for you. What was the other thing? Taxes, types of traders, margin, okay? Margin. Trading on margin means that you are basically borrowing money to trade with, okay? I don't recommend that at all. But you've also got what's called limited margin, okay? And limited margin means that you can trade with funds that have not settled yet. In order to get a margin account to where you can trade with funds that are not settled yet, most places are going to require you to have $25,000 in your account, okay? What that means is that it takes 2 days. It takes the trading day plus 2 more days for everything to settle once you make a move, okay? If you sell a stock the next day and then 1 more day, and then that money will actually be yours in your account, okay? And the same thing with a buy. You buy a stock, it takes that day plus 2 more trading days for that to be paid for, okay? So in Fidelity, like if you have a limited margin account, you can go ahead and trade that money. Okay, like if you sold a stock, you can go ahead and trade it that same day. And in Fidelity, and I believe in most other accounts, it will show you that as available to trade even if you don't have margin. So when you sell a stock, when I sell a stock in my Fidelity account, okay, it says cash available to trade in my balances, and that money will be in there. Then it also says settled cash, and that's the cash that's actually had that day plus 2 more days and is actually mine. Okay, so you can kind of trade on margin, but you have to be careful about it. Okay, on limited margin, I mean. And here's what I mean. Okay, because it takes 2 trading days for your funds to settle, or for sells or for buys. Okay, you have a little leeway. It will show you this cash available to trade. Okay, if you sell a stock and then you use that available to trade money in that same day, there is a chance that you will get hit with a violation because these funds are not settled before it's time to pay for that other one. But if you wait 1 day, then you can, even though it hasn't been the full 3 days. So the reason for that is because buys and sells both take 3 days to settle. So if I sell one and then I wait 1 day to buy the other one, then by the time you have to pay for the one you bought, the one you sold has already settled. Okay, so it's kind of like trading on margin. It's basically just timing it out. Okay, if you buy a stock with money that is unsettled and then sell the stock in the same day, you're getting a violation. If with Fidelity, if you get 2, they lock your account for 90 days to where you can't trade with that available to trade funds. Okay, it happened to me once. Doesn't mean you can't buy and sell. It just means you have to wait for that stuff to fully settle before you can use it. Okay, so that's important to realize. It's important to realize that you have to wait at least 1 day between when you sell and when you buy in order to make sure that you don't get any violations. Okay, because unless you have that $25,000 in your account, you're not going to be able to trade on limited margin. Okay, what else? Extended hours trading. So the stock market is open from 9 to 4 Eastern, or 9:30 to 4, 9:30 to 4 Eastern. Okay. Depending on what brokerage you go with, you can trade before that market opens and after the market closes for a certain period of time. Okay. With Webull, they just give it to you. You can trade from like 4 a.m. all the way to, you get the most with Webull as far as extended hours. Okay. With Fidelity, you have to call them and say, I want you to open my account for extended hours. There's no requirements. They just want to read you this little thing to show you about the risks of doing it. And that's something that I want to talk a little bit about. Pre-market and post-market are way different, okay? Because there's way less people trading and people are making shifty moves during that time period. You may see a stock go way up during the extended hours during the pre-market, and then as soon as the market opens, that shit crashes. Or you may see the opposite. It may go way down and then it may jump up, or it may go way down and you expect it to jump up, and then when the market opens, it keeps going down. Okay, so extended hours are dangerous. Okay, unless you see something in the extended hours to where I'm just like, there was a news story that came out and you know for sure that stock's going to do a certain thing, and then you want to get in before the market opens, I wouldn't mess around with the extended hours. It's kind of dangerous, and until you get a feel for what's going on, I would stay away from that. Okay. What else? I'm going to leave it there. I'm just going to say that once again, I'm not a financial advisor. I'm just giving you some basic information and basic knowledge for you to get started with. Now I'm going to do a couple more videos, and you might even wait until I come out with a couple more videos before you start making moves and stuff. I'm going to like put a little bit of stuff in the comments section, some videos for you to watch, and I'm also going to make some other videos on some strategies and stuff, and maybe whatever other information I can think of, and recommend some YouTube channels for you to subscribe to and stuff like that. And hopefully it'll be real informative for you, and we can get kind of semi on the same page before anything, whatever we decide to happen in this group happens. Okay, I just kind of want a place for me to post about what I'm doing in the stock market and talk about it, and have people to bounce stuff off of, and you know, see what you guys are doing and stuff like that. But I realized that a lot of the people who are interested in this wanted to learn some stuff, so here it is. Hope you enjoyed it. Thanks for joining the group. 93.